Hi, I'm Holly McDonald. I'm a realtor here in Costa Mesa, California with Compass. And today I am joined by Jason Thomas. Jason, go ahead and introduce yourself.
Yeah, hi everyone. My name is Jason Thomas. I'm a mortgage advisor with J&J Financial.
And today we are going to chat about what's on everybody's mind right now. We're going to talk about interest rates because they are the talk of the town. Jason, what are you seeing as far as the interest rates and how that's impacting the buyers you're working with?
Yeah, I mean we've seen interest rates, increase pretty dramatically this year, especially since we were coming off of all-time lows previously, and it's really just been pretty volatile as well. I mean, just in the last week, it's gone up another half a point, back from around 5%, let's say on a 30-year fixed, upwards of 5.5, maybe even a little bit higher today currently. So it's having a huge impact on purchasing power for buyers.
So if you were a buyer and you were trying to figure out ways to, minimize your expenses, what are some tricks and tips that you are seeing and recommending to clients?
Yeah, so in order to react to what interest rates are doing, lenders are coming out with some different programs that are helpful to either temporarily lower the monthly payment for potential buyers, or they could always explore the adjustable rate mortgages as well, which some of those are still decently competitive. But as far as what we want to discuss today regarding the buy down loans, those are especially useful right now because we are seeing a shift in the real estate market regarding an increase in inventory. Prices have been cooling off a bit. And Holly, you can add your perspective as well, but there are quite a few price reductions and some back on markets as well, right?
Yeah, actually today I was just looking at the data and parts of Costa Mesa have seen over 50% of the inventory reduced. Other parts have seen over 30%. So, I mean, across the board, there's a significant amount of price reductions out there. And I think that
Right.
that's giving buyers the notion that, essentially it's a buyer's market. And, in some ways, yes, buyers definitely have some leverage now compared to what they had 6 months ago. But at the end of the day, even though inventory is going up, it's nowhere near a peak by any means. There's still not very many homes available for the buyers out there, but buyers are being much more conservative right now.
Yeah, and I agree with that. And I think because we were coming from a point earlier this year where the inventory was just so ridiculously low that buyers are thinking, oh yeah, maybe it is a buyer's market now because there's so many more. But yeah, like you were saying, it's still nowhere near a peak market from an inventory standpoint.
So let's talk a little bit about the buy down loans because I don't think a lot of buyers know about those. Or maybe they've heard of it, but they don't quite understand how it could actually benefit them. So how does that work?
Yeah, so in the case of let's a price reduction, for example, or if a home goes back on the market, falls out of escrow, those are properties that buyers can potentially negotiate with the seller on, because the buy down loan, basically, effectively what you're doing is you're temporarily lowering or buying down your interest rate. You still are qualifying at today's interest rates, and then you're just getting a break for the first year, 2 year, or 3 years, depending on how your lender is structuring it for you. But it is something that cannot be paid for by the buyer. So the best way to do that would be to approach the seller, see if you guys can come to an agreement, through a seller concession that's going to fund the buy down portion of the loan that needs to be paid for. So as an example, let's say a home was listed for $1,050,000 and the seller reduces it to $1 million. But then a buyer comes in and they're like, hey, I will pay you $1,035,000, let's say, or $1,040,000, and then request whatever the amount of the concession they need to fund their buy down loan. If they're doing a 3-2-1 buy down, so they're getting a break for the first 3 years, they'll probably need around $35,000 as a credit. That way, the seller's still making at least $1 million, or netting maybe even a little bit more on the sale, and then they're helping out the buyer by drastically lowering their payment. If this was like a 20% down scenario, then the buyer's going to get a $1,400 a month break the first year on their mortgage payment, which is huge considering how costly everything is right now.
Yeah, I think a lot of the pushback we're getting right now from buyers is they look at what the payment would have been back in January, February, or March, and then they're comparing it to today. And if their buying power is reduced by $1,000 or $2,000 a month, they have to lower their price point essentially to make the numbers work. So I think this is a great solution. That way buyers can go in, they can get the house they want, they can get a break for the first couple of years or so. The sellers just have to understand why they're being approached for the concession. But at the end of the day, most of the time sellers are mostly just concerned about what their net proceeds are going to be. So if they're walking away with the same amount and able to sell their house, it's a win-win. So that's pretty amazing.
Totally, yeah. I mean, seller, buyer are all happy. The buyer's able to afford their home. And of course, we can't predict the future, but odds are in the next couple of years, interest rates should come back down a bit. Once inflation cools off, probably not to, the interest rates that we saw during COVID. But if you're qualifying at 5.5%, let's say right now, you get that break for the first couple of years where you're at 2.5% potentially the first year, and then 3.5% the second year. After a couple of years, if rates are back around 3.75%, 4%, whatever it is, even if it's mid fours, you're going to want to refinance at that point to before your loan goes back to the note rate, because after the temporary buy down period is over, if you haven't refinanced within 3 years, then you would go back to 5.5% fixed for the remainder of the term. But if you're able to get a break, like I was saying, for the first couple of years and then refinance into a lower rate, overall, you're going to save a ton of money.
I think it's important for buyers to also look at the cost savings because the rents are so high right now. I mean, average rents around Costa Mesa are well over $5,000 a month. I can't imagine how scary it is to be a renter right now because prices have gone up so dramatically in the last couple of years. And of course, renting, it has its purpose, but you're never going to get that money back. So if you're able to get into a home and get it at a discount for a couple of years, just even a couple of years, you're going to save so much money in the long term. And even if you have to bump it back up to 5.5% in 3 years, you just have to look at the numbers and see how much you're saving in the first couple of years. And I think the math is going to really speak volumes, right?
Oh, absolutely, yeah. And historically, real estate is a very, very secure asset to have. I mean, it's constantly appreciating, even if there's slight dips here and there. Other than obviously the Great Recession in 2008, but that was an anomaly. But between amortization on your mortgage and then appreciation on the home's value, you're gaining quite a bit potentially in equity. Especially when you forecast it out 5, 10 years or more, and like you said, with rent, it's just 100%, interest basically that you're just throwing away, and you don't have anything to show for it at the end of the day.
Yeah, and I suppose another option for buyers too is that they could ask for the seller to just cover like closing costs instead of the buy down.
Yeah, that's another option too. So, I mean, if you have a client that's okay with the monthly payment at today's interest rates, they just want to keep cash in their pocket. You could ask the seller to cover all the closing costs, which, on a $1 million home, if you're lumping everything, tax, insurance, into your mortgage, could potentially be upwards of 2% of the purchase price. So, almost $20,000, right? So it's quite a bit of money that they could potentially save. A third option even is to just pay points on your mortgage, and that could be seller funded as well, and you could potentially buy down, your interest rate maybe 3/4 of a point or so, and have that just be fixed for the life of the loan.
Right.
So, and again, this is something that we probably wouldn't have even been entertaining just a couple months ago because it was such a seller's market. But now that there are, it's shifting now. So buyers do have the potential to negotiate. And these are some great options that buyers should be aware of, to help them get into the home.
Yeah, I think that's a really good point because I know just from having worked open houses the past couple of weekends, buyers and their agents are coming in and they're complaining about the interest rates going up and stressing that as the rates go up, it's likely that they're going to get prices that are lower. And that's not all the forecasts I'm seeing, and of course we don't have a crystal ball, but the forecasts I'm seeing don't call for prices to necessarily come down. I think what has happened is that back in March, April, May, even when buyers were out there and they were just overbidding like crazy, there was like this false inflation of some houses, and those houses, you know, they were very, very lucky and very, very rare. It didn't necessarily bring the whole neighborhood up by that much. It was just, a buyer that came in and was willing to kind of do anything and pay any amount to get the house. And it didn't really matter because, there was just so much competition, and the, rates were so low. People were like, it's like almost free money.
Yeah, I agree, and those are outliers in the market, like you were saying. But some sellers will like, oh, hey, the neighbor down the street, was able to sell their home, for $300,000 over asking, so I'm going to list mine for that. And then those are the ones now that we're seeing, having to reduce their price because, they just listed it, higher than what the true market value of the home was. But that doesn't, like you were saying, it doesn't mean that values are actually dropping. It's more of people just understanding that we can't be so aggressive with our listing price necessarily right now.
Yeah, it was definitely a matter of supply and demand a few months ago, but as more houses have come on the market, I think it'd be really interesting to just kind of look at a graph of what the values have done. Even if you look at maybe where the peak was back in March or so, but excluded that and just looked at where prices are today, they're still up from where they were last year or 2020. Like overall, equity here is just it's a really good investment.
Yeah, I agree. And, like we're saying, I mean, it's obviously not going to appreciate at the rates that it has over the last 12 months. That's not sustainable. But, overall, homes are going to continue to increase in value. And we're not in a market right now that's going to, pump the brakes on that because even though inventory has increased, like we were saying, it's still not heavily favoring the buyer at this point.
Yeah, I guess at the end of the day, the most important takeaways from this little video that we're doing is that buyers have options where they can still get rates down, and they're able to go to the seller and try to ask for money to help offset their mortgage rate because the mortgage rate is the biggest concern. There are ways to still lock in a lower rate with these types of mortgage programs. And if you're a seller and you still, maybe you missed the boat on getting 10 offers in a day, because that's not really where our market is right now. But if you still want to get a really good price and a really strong buyer, you maybe ask for a concession. And that's okay because if you're still getting a really good price and that is going to overall be fine, giving the concession is only going to help get the buyer into the house and gets you out of the house, which is ultimately that's the goal.
Yeah, and at the end of the day, I think what most people are concerned about is going to be what their monthly payment is. So, I mean, I would be totally happy paying a 10% interest rate if my monthly payment was $1,000 a month, right? Or 20%. Like, it wouldn't really matter at that point because my payment's so low.
Yeah.
So, I mean, at the end of the day, we can talk about the purchase price, and I know some people are price conscious regarding that as well, but it is heavily dictated on what the interest rates are doing. So, if somebody can't afford, but if they don't want to pay 5.5%, on an almost $1 million loan, but there's an option out there for them to start off at 2.5% for the first year. I think a lot of people are going to go for that.
Yeah. So the 3-2-1 lowers your interest rate for the first 3 years, and then the 2-1 buy down is for the first 2 years. And anytime within that time, you could essentially refinance it once the rates get lower.
Correct. Yep. Yep. And the 3-2-1 is going to be a product that that with a little bit more of a down payment, more than 10% down is something that they'll be able to utilize for that since the credit is, fairly large coming from the seller to fund all of that.
Yeah.
And it also, since we do live in a high-cost area, let's talk about loan limits for this program as well. You're going to be limited at the conventional high-balance loan limit for LA and Orange County, which is $970,800. So that's, with 20% down, that's going to be approximately just a hair over $1.2 million for a purchase price.
Okay, so buyers, if you're shopping out there, you want to look at properties that are under 1.2 and under, and ideally ones that have been on the market a little bit so that sellers are more open to considering the concession that they're going to be requested for. And are you seeing good success with it? Because I haven't had a buyer use the program yet, but I think it's a really good option for a lot of people that are concerned about payments and the rates.
Yeah, so I have a couple buyers that they decided to quit looking completely. First time home buyers, just because everything got so expensive and the rates drastically went up this year, right? And so they just kind of got in their own heads. They thought they were priced out. I brought up this program to them, and now they're back looking. So yeah, and we had one. We were going to open escrow, but the seller decided to take it off the market at the last second for just personal reasons. But they were the front runner with this program, with the way that we structured it, because ultimately the seller was actually going to get the most from my buyer's offer, while them taking advantage of the buy down. So I think sellers, like you're saying, I think sellers will definitely understand if this is explained to them properly. Hey, you're still getting more, with this person's offer, even though you're offering them this credit. And then it's just, like we're saying, it's just great for the buyer because they can get back to, monthly payments and interest rates that we were seeing a year ago.
Yeah, and I would imagine that if somebody has to offer, $25,000 more to kind of offset it for the seller, the difference in their monthly payment, because the loan rate is going to be so much lower, is probably very minimal. I mean, the benefits far outweigh the negatives.
Oh, absolutely. Yep.
Well, if anybody out there wants to kind of crunch those numbers and see how drastically it could impact your payment, Jason is happy to help you. And if anybody wants to go explore some housing options that might also work with this program and get you back into the market at a really good rate, I'm happy to help you too. So, Jason, thank you so much for your time and for doing this. And let's go help some buyers and sellers.
Yeah, it sounds great. Yep. Thanks for having me, Holly.
Okay, bye.
Bye.